Hi, my name is Mary. I am a realtor in the state of California. In this video, I will talk about how home buyers can get pre-approved for a mortgage. As home buyers search for their homes, getting pre-approved for a mortgage can be a very important step to take. Consulting with a lender and obtaining a pre-approval letter will give you the opportunity to discuss loan options with the lender and budgeting with the lender. This step will clarify your total house hunting budget and the monthly mortgage payment that you can afford. In addition, lenders may offer programs that will help you with your down payment, like a down payment assistance program. There are a few key takeaways that you want to remember in this video. First, when you're searching for the house, the seller will want to see a mortgage pre-approval letter and proof of fund to show that you are a serious buyer. Second, you will have to fill out a mortgage application and supplying your social security number so that the lender can do a credit check on you. Third, you also need to provide documentation of job history, assets, liabilities, income tax returns, and more. For those who are self-employed, you may have to supply more documentation. Fourth, after reviewing your application, the lender will either grant you a pre-approval letter, with conditions, or will deny your pre-approval. So what are the metrics that lender will look at to pre-approve you for a loan? There are a few metrics that lender will look at specifically to approve you. I make a list below. First is they will look at your debt to income ratio. I make a separate video on this debt to income ratio. For the link, look in the description below. Second, they will look at your loan to value ratio. Third, they will look at your credit history. Fourth, they will look at your FICO score. Fifth, they will look at your income. And sixth, they will look at your employment history. Think of a mortgage pre-approval as a physical exam for your finances, where lender will likely poke and prod into all corners of your financial life to make sure that you will be able to repay the mortgage that you're trying to get. So the question is, when should you get pre-approved for a loan? Mortgage pre-approval letters are typically valid for 60 to 90 days. Lenders put an expiration date on these letters because your credit profile and your finances could change in this time frame. When a pre-approval expires, you have to put out a new mortgage application and submit updated paperwork to get a new one. If you're just starting to think about buying a home and you suspect that you might have some difficulty getting a mortgage, going through the pre-approval process can help you identify the credit issues and potentially give you time to address them, like saving up more money and fixing your credit scores. Seeking pre-approval 6 months to a year in advance of your serious home search can put you in a stronger position to improve your overall credit score. You also have more time to save money for a down payment and closing cost. When you are ready to make offers, a seller will want to see a letter of pre-approval and proof of funds to show that you are a serious buyer. In many hot housing markets, sellers have an advantage because of the intense buyer demand and a limited number of homes for sale. They will not consider offers without the pre-approval letters. So the question is, what are the documents needed to get pre-approved? Here's a list of documents you will need. You will need 60 days of bank statements. Lenders will want 30 days of pay stubs. You will need 2 years of W-2 tax returns, income tax returns, asset account statements if you have investment accounts like retirement savings, stocks, bonds, mutual funds, etc. You will have to show your ID, a form of ID, such as driver license or a US passport. For those who are divorced, you could use divorce papers if you want to use alimony or child support as qualifying income. For those of you who have family that want to contribute to your down payment, you can use gift letters to show that your family give you some money for down payment. For the people who are self-employed, you will need to supply your Schedule K-1 Form 1065. If you enjoyed the video, I would appreciate it if you give me a thumbs up. Thank you very much for watching, and I will see you in the next video.